Hello and welcome back to The Long Short. I'm your host, Tom Kehoe. Well, my co-host, Drew, is away for the holidays, but fear not, listeners, as we have a superlative guest for you today. Podcaster, broadcaster, author, university lecturer, and hedge fund founder. So a big welcome back to Long Short favorite, Henri Arslanian.
Thanks for having me, Tom. Wow, I've never been referred as a superlative, but I'll take it. Thank you very much for having it. Thank you. Good congratulations for all the success of the podcast as well within the hedge fund community. Well done, guys, with the long short.
Oh, that's very good. Thank you. Thank you so much. Henri, it's great to be speaking with you today. We're hearing and seeing a lot more of you lately. So congratulations on bringing your vibe to the small screen. Can you tell us about your weekly crypto show that's going out on CNBC, right?
Yeah, absolutely. I mean, obviously, many people know me via Nine Blocks, the hedge fund I co-founded, or know me from my previous life as a PwC crypto leader. But obviously, I've been a university professor now for over 10, 15 years now, and I've been teaching the world's first crypto university course in 2015 and creating daily content on social media since 2016. And of course, I have many books. I published numerous best-selling books. And recently, about 6 months ago, we started the idea of launching a TV show. I was approached by CNBC Arabia, especially with all of the activity now in crypto in the Middle East, with Dubai and Abu Dhabi becoming a big hub. The idea was to launch institutional focused crypto TV show that basically goes out to 60 million people each week, and then a couple million via social channels. And that's how the idea of Crypto Weekly came to be. And now every week, basically, we record a show in studio where I not only comment on the latest developments we're seeing, but also had a chance to interview CEOs, leaders in the crypto space, and also have some educational segments as well. So I always have an educational segment about the class, about the asset class. People can watch it on my LinkedIn channel or also on my YouTube page at Henri Arslanian, Henri with an I. All my previous episodes are shown there. So a lot of work, but actually it's rare that many people often start on TV and then they go to social media. This time it happened the other way around. But it's very good to see that after almost a decade of creating educational content, now it made it to the mainstream with millions watching it every week. So very happy to hear that.
An overnight success that's taken 10 years in the making.
Exactly.
Congratulations, Henri. And I can certainly vouch as someone who really is a novice in this space. Your show, the Crypto Weekly show, really is a must watch. So congratulations again, and I really look forward to seeing the new content coming out. But 2024 really has been a remarkable year. Extraordinary year. Again, we started the show describing you in the superlative terms, but certainly that's how you would describe the year just done for crypto and digital assets, filled with game-changing developments and unprecedented shifts. Henri, what do you then see as the three most significant events of the past year that have reshaped the crypto landscape?
Tom, absolutely. 2024 was it'll be historical year not only in the history of digital assets, I would argue in the history of money. Really, I mean, from a crypto perspective, I mean, I've been in the space now since 2014, and every year, we try to predict what will happen, trends may happen in that year. But definitely this year has been one for history books. I mean, I would say there's a couple of major game-changing events that took place. The first one was, without any doubt, the adoption of the first spot Bitcoin ETF in January 2024. Really, like 15 years after the creation of Bitcoin, we have a spot Bitcoin ETF that has been launched. And of course, it's been an absolute success. I mean, to put things in perspective, the Bitcoin spot ETF is the most successful ETF launch in history. Over 30 years of data, 5,000 ETFs. The BlackRock one alone has over 50 billion in assets right now in less than a year, and the inflows are simply continuing. So I think the spot Bitcoin ETF was without any doubt, one of the big developments of the year. The other one, I would say, there's been numerous speeches around the presidential elections.
Yeah.
But in July 2024, President-elect Trump, soon to be President Trump, made a speech at a Bitcoin conference in Nashville. And in my opinion, in the history of Bitcoin, that speech will go down in history as one of the most game-changing announcements that took place. I mean, at that event, I think Donald Trump himself realized the power of the crypto community, realized that there was a pretty solid stakeholder group there. He mentioned numerous things during that speech that he wants to come up with regulations for stable coins in the first 100 years, that he wants to potentially explore a strategic reserve of Bitcoin for the U.S., and also that he wants to fire pretty much the head of the SEC, Gary Gensler, and
Right.
really come up with a pro-crypto environment. And I think that speech was really one of the big game-changing moments. So if I had to put the top two between the Bitcoin ETF and that speech, it's pretty much a toss-up. Number three, it's a bit more tricky. I would say there's been a numerous important developments that took place. One of them, personally, as somebody's like many of our listeners, I'm sure that is in the hedge fund industry, was to see some of the institutional moves in crypto. Very good example. Goes from BlackRock recently suggesting to clients that they should have up to 2% of their portfolio in Bitcoin, which is crazy if you consider that only in 2017, the CEO of BlackRock was calling Bitcoin an index for money laundering. It's funny how things change pretty quickly. To really, when you start seeing some, pension funds in the UK, for example, making their first Bitcoin allocation, to even state pensions in the US, talking about potentially investing in Bitcoin. So I think there was a lot of these institutional elements that took place over the last year that were quite important. But definitely, when it comes to number one and number two, it's
Yeah.
the Bitcoin ETF and the speech from Donald Trump.
And Henry, what about you just mentioned it there, the launch of the Bitcoin ETF in January of this year. When we had you last on the show, you were talking about this being a story that was just emerging and there was breaking news around that. And what we've seen then also is the surge in crypto derivatives. Um, what do you think has driven this level of enthusiasm? It's been just enormous. You said it's been the biggest ETF in the history of any ETFs been put out there.
Yeah, I mean it's interesting because if you listen previously to Gary Gensler, the chair of the SEC, or other policymakers in the U.S., often the messaging was that the public is not interested in Bitcoin. This is irrelevant. Please go away. And I think the data speaks for itself. The demand that we have seen for this instrument actually speaks of how much general interest there was from a big portion of the investing public. Now, was I surprised of this? I would have to say that it was a bit of a toss-up. I was not sure if people were going to go buy Bitcoin via the ETF or actually go buy it on a crypto exchange and buy it spot. There's numerous reasons why somebody would go buy the ETF. Often it's in their 401k account. It's easy. They have it on their brokerage account. And there's obviously numerous let's say convenience and also some fiscal reasons that people may want to buy it via the ETF. On the other hand, though, if you think about the ethos of Bitcoin, somebody like me that has been in Bitcoin for a long time, many of us believe that, maybe you should be able to hold your own key, not your keys, not your coin, right?
Yeah.
So I was not sure if many people would come in via DTF, but I was obviously, I've been pleasantly surprised to see that. The couple of things that I'm watching now on DTF is obviously how quickly it's going to grow. I think this is just the beginning. Second thing that I'm watching is what other assets will be listed. Of course, now it's going to be Ethereum next. With Solana is probably going to come as well.
Yeah.
But third, what I'm watching is how is the investment advisor industry going to deal with this? I mean, just to put things in perspective, the 401k advisory market in the US alone is a $7 trillion market. So, I mean, that alone, I think it'll be previously talking about Bitcoin had a career risk, or there was a chance that your clients would see you as being too risky or a bit of a cowboy. Not mentioning Bitcoin, I think, is a career risk. And this shift happened way quicker than I expected with the institutional audience. That being said, are we there where Bitcoin is mainstream? Absolutely not. I think if you think even the big investor base in our hedge fund ecosystem globally, in the 4 trillion or so that we have in the hedge fund world, think about the sovereign wealth funds, the pension funds, the big endowments. We're still very far from those groups, those capital allocators embracing or looking at crypto yet. But definitely on the other way around, on the grassroots level, we're definitely seeing a lot of interest.
Yeah, we've moved on certainly over the last 2 years. It's been rapid in terms of that sentiment shift. But let's dive into the market, because whenever I think, again, my very basic view of the world, whenever I think about crypto assets, I think about two cryptocurrency coins. You've mentioned them already, Ethereum and Bitcoin. Bitcoin, I think, has gained nearly 150% on the year. It's running at over $100,000. I remember a couple of years ago somebody saying to me that Bitcoin's going to get to $100,000, and I thought they were stark raving mad, like barking mad. And this was at the time when it was about $10,000 or $5,000. So good for them that they were able to back their convictions on that. Ethereum has also gone up over 60%. Um, do you still see these as being the big two when it comes to market dominance and investor interest, or are we seeing any meaningful competition emerge?
Yeah, first of all, the rise of Bitcoin has been, like as you mentioned, truly remarkable, and many would argue this is just the beginning. I remember during COVID, it fell to $5,000, right? These were
Mm,
memes that were put out at the time. So, I mean, it is what it is. I think it's very important to differentiate between Bitcoin and the other many of the other layer ones. Of course, Bitcoin, you can argue, is digital version of gold, better version of gold. Let's not get into that debate of what it is,
mm,
but I think it's very different from whether it's Ethereum and other layer ones that we can see as whether it's the definition that it should fall into. I think it's been one big difference that I've seen this year compared to previous years. Whereas previously, it would always the conversation would be Bitcoin, Ethereum, and then everything else. This year, Bitcoin obviously is still the big dominant player. I would argue there's been even more reinforcement of the role of Bitcoin in investors' portfolio with everything going on at the macro level. But also, I would say when it comes to layer ones, probably the one that broke a part of the pack this year was Solana. Right now,
yeah.
actually, if you look at even new developer activity, there's a lot more activity taking place. A lot of new enthusiasm, activity, and buzz around Solana. So I would say it's a big toss up between these two, on between Solana and Ethereum. Who's leading the pack? Solana alone has over 100 million addresses right now, so there's a lot of activity there. The one I would say, so really, I think that's how I would look at it. And there's obviously still a suite of L1s that are in the news quite regularly. The one, let's say, vertical of crypto that I've been quite surprised in the past year, and I'm not a fan at all, but it's been the entire meme coin ecosystem.
Now, what
There
is
was
meme coins, Henry? Please help me out.
Yeah, well, people, we always had NFTs, from the punks to the Bored Ape clubs. I mean, there
Mm,
was always the NFT ecosystem that was there, and we've had meme coins for some time. I mean, the best example of this, and probably the longest, best known meme coin is Dogecoin, which
yeah.
was literally created as a joke in 2016. And I still remember the day Dogecoin was launched. I still vividly remember when it was launched. Initially, by the way, Dogecoin was launched as a tipping mechanism on Reddit. This is a fun fact many people don't know. That's why actually it's very the denominations are very, very small, and then it actually evolved in a community. And so it's been very interesting to watch meme coin. I didn't anticipate the meme coin frenzy to take part as it did right now. There's been obviously a tremendous number of meme coins that have been launched. 99.99% of them are pure garbage. But I think it's the interesting part, if I put my professor hat on for a second, is that for the first time, or it allows us to, in the crypto ecosystem, to value community. I mean, let's take Dogecoin for an example. The Dogecoin community actually came together a couple of years ago to send the Jamaican bobsled team to the Olympics. They went to build wells in Africa. So it's actually a belonging of a community of people that actually come under the Dogecoin umbrella, by Elon Musk being a very good example of how he's been promoting it. And actually, there's a way to look at this, how meme coins put a value on a community. And I'm sure there'll be many studies on these, maybe many PhD theses on the topic as well. But I think that's what it led to. Unfortunately, the problem with meme coins is that there's obviously a lot of pumps and dumps. There's
Yeah.
tremendous amount of market manipulation and fraud.
Where are
And
the
unfortunately,
fundamentals, Henry?
what? Sorry?
Where are the fundamentals for these?
No, no. I mean, there's no money. A part of, I think, the value in the community is not much. It's purely market manipulation. And the problem I think we have with this is a bit similar to the ICO boom in 2017. These meme coins will come crashing down, and they may give the crypto ecosystem a bad name because, again, people will associate Bitcoin and crypto with meme coins, which is clearly not the way it should be.
So Henry, you will know this because after all, you started this going back now 6 years ago, but you'd be pleased to hear that Amos still continues to do the annual report with PwC. And our annual report this year revealed that nearly half of all the traditional hedge funds that we surveyed have exposure to digital assets. Now, I thought that statistic was really staggering, given that where it came from previous year, it was about 30%. And I thought that that was actually pretty much the threshold, and that it was going to be taking some amount of time to get up to nearly one in every two. But why do you think hedge funds, and of course you are in that space yourself, but why do you think hedge funds are increasingly embracing crypto? What opportunities are they seeking to capture?
Yeah, I mean, it's been a very interesting piece of data. I have to say the AMA Crypto Hedge Fund Report, which we launched together when I was at PwC. Interesting fun fact as well. It's at PwC's most downloaded report globally as well. And I heard at AMA it was the most downloaded report after the AMA DDQ, which is it shows you again the interest in the space. I can tell you every single crypto hedge fund in the space that has the AMA Crypto Hedge Fund Report in their deck, because it's been such a good barometer of the industry. I mean, yes, I mean, am I surprised that a lot of hedge funds are holding digital assets? I would say yes and no. I think there's been, I mean, obviously, like the hedge fund that I co-founded, 9Blocks, we're crypto hedge fund, right? So obviously, we do funding arb, basis arb, mean reversion, and a lot of statistical arbitrage opportunities with our fund, but we're crypto native. Where I think it's become very interesting is to see some of the TradFi hedge funds, all the big hedge
Yeah.
funds that we know, get into the space. And I think there's a couple of reasons to it. One of them is that there's been demand from the available instruments. If you think about the ETFs to some of the listed options and futures and products that are available, but also the big blocker that what I was seeing previously was the allocator community. So really, I
Yeah.
mean, think about post FTX and even previously, if you're, let's say, a multi-billion-dollar hedge fund, and you went to, you don't want to, stop, create issues with the golden goose. It's there, you're making good money, the returns are okay, the sticky capital, these allocators have allocated into you, they're probably not going to redeem on this unless you really screw up. Why create this issue, especially that you knew that a lot of these allocators were sensitive with digital assets? So I think there was one of the reasons was really that it was actually they didn't want to, let's say, rattle the cage with some of their existing LPs. That has started to gradually change. Like I mentioned before, it hasn't happened at the very, very large, top of the capital allocators, but definitely when it comes to the family office market, a lot of the high net worth market, the fund market, a lot of these allocators now are very happy to see crypto as part of a portfolio the hedge fund managers is trading. And of course, the reality, there's a lot of investment opportunity. There's a lot of good alpha opportunities as well. I mean, even a fund like ourselves, like 9Blocks, we're over 35% net year to date with a Sharpe of 2.5. So, I mean, there's a lot of opportunities in the digital asset space right now for any fund manager that is happy to go through it. The big thing I would say is actually managing if you're like a traditional hedge fund and you start trading, let's say obviously the ETFs or the CME option, that's one thing, but trading on the different crypto exchanges, especially as you get into the perps, as you get into DeFi, it becomes a bit more complicated. And I expect to see over the next couple of years, many of the large hedge funds that we know, many of the AMA members, literally spin off a new division or either acquire or actually buy a strategic stake in other crypto hedge fund managers, really to enable them to do this, because it's kind of a different, operationally, it's very different than managing a normal hedge fund.
You alluded to a little bit, Henry, Trump's speech earlier in the summer, and then there has been some change as well in the EU in terms of the MiCA legislation. But the industry is not without its hurdles. What would you say are the biggest challenges then that the crypto sector has faced in 2024, and how well do you think the sector is responding to them?
I think we need to look at which region of the world this is. For sure, pre-Trump election, the biggest trouble we were seeing, especially in North America, was the regulation by enforcement. I mean, if I put my lawyer hat on for a second, there was a complete lack of due process. Operation Choke Point 2.0 that really targeted the crypto industry. I mean, these things I hope to see them litigated over the next couple of years. 100% there was due process violations there on that perspective. So I think this anti-crypto stance was probably until the elections in the U.S. a big problem. I would say globally post-Trump's election, the tide has started to shift, because if the U.S. has now become very pro-crypto, if you're a competing country and you want to position yourself, And if you still keep your old school anti-crypto attitude, you're going to lose out. Previously, it was okay because the US was anti-crypto, so you didn't lose much. But now, obviously, that's going to change. I think what's been interesting to see is some places benefited, like places like UAE, Abu Dhabi, Dubai. I mean, just to give you put things in perspective, I'm right now in Dubai. We're the first crypto hedge fund to have a license by VARA, the world's first crypto specialized regulator. But literally from my office now, I can see the headquarters of the top three biggest exchanges: Binance, Bybit, OKX. I'm literally 1 minute walk away from all my counterparties, which is crazy. So imagine if everybody was in Mayfair in like one block and all the industry was there. This is going to be difficult. The UAE was very smart to take advantage of this. It's going to be difficult for other places to kind of shake it up. But the US, I think, has a chance. So I think this is going to be one of the positive things to watch. Despite this, there's still some major difficulties for the crypto industry. I mean, from the quality of service providers in the space to the lack of education of the investor base. But I would say one of the big ones is also the banking space. I mean, really, for any crypto hedge fund manager right now, one of the biggest challenges is, as stupid as it may sound, is really opening a bank account and being able to do fiat wires. There's still, unfortunately, while there's been a change in government in the US, there's still the old policies that are put in place of crypto is too risky, we don't want to touch it, and that is really affecting negatively the industry.
Yeah, you
And that,
touched on.
unfortunately, is going to stay on for some time.
You think so? Because when I say you did touch on that, and you will know, Henry, as you are a member of the group, AIMA's Digital Assets Working Group. We've just concluded a short paper. We went out and surveyed crypto hedge funds, crypto firms, and TradFi firms, and found that a significant percentage of crypto funds surveyed have been denied basic banking services. These would be like checking accounts. So you've referred to it there in terms of Operation Choke Point 2.0, I guess. But why does this issue persist, and what does it mean for the sector's growth?
It's very sensitive question. It's very difficult for people who are not in the space. If you're managing a normal hedge fund in Midtown, you're in Miami, Chicago, you're like, bank account, come on, all the banks are after, are trying to get my business. It's the exact opposite in the US. So basically, I'm a firm believer that signature banks, Silvergate banks were closed down from a policymaking perspective. Right? Because they were servicing the crypto industry. Many of the other banks that offer correspondent banking relationships, UTB in Texas is a very good example. There's Consumers Bank and as well on the East Coast. These banks are under scrutiny of various regulatory bodies because they service the crypto industry. I'm hoping this is going to change, but really this is a major problem, for anybody in the crypto. But it's not only crypto hedge funds, by the way. Anybody in the crypto space to open a basic bank account. This is why, first of all, many in the crypto industry are moving outside of trying to avoid even US dollars because the correspondent banks basically close down accounts or they block transactions. The irony for me is that many of the correspondent banks that block these crypto transactions are now targeting crypto firms like us that are regulated to try to offer our banking services directly to us, which I find is a bit hypocritical, but it is what it is. The other problem we don't talk about a lot, and I'm happy that recent, VC and other crypto figureheads have started bringing this topic back up, but it's really the personal bank account closures. Yeah. I can tell you, everyone that I know in crypto who has been in the industry for a couple of years, the banks have tried to close their bank accounts. I can tell you personally, now after a couple of years now, we're more vocal, but one of the big US banks tried to close my bank account almost a year ago. And the reason that was given, they didn't want to tell me. They told me, Henry, we're closing down your account. You have 30 days. And I told them why. And finally, they told me orally, they didn't want to have it in writing, that it's because I'm involved in the crypto space. And I was able to revert that really only because the investment banking division of that bank on Monday was publishing a whole crypto report where I was on the cover. And I told them, guys, this is a bit of a joke if you're going to do this. And on Monday, the left arm is closing my account, right arm is putting me on their cover. I'm going public with this. And of course, over the weekend, magically, everything got sorted out. But I have the privilege of having access. I have the privilege of access to the leadership of a lot of these banks. That's not the case for everybody. I can tell you, I know personally many crypto entrepreneurs over the last couple of years who have lost their businesses. The businesses have gone bankrupt. And they have personally had their accounts closed, often with 30 days, just because they're involved in the crypto community. And I look forward to a day where we will be able to go back at these instances and actually there'll be some kind of post-mortem on why these actions were taken and make sure there was a bit of accountability.
Well, AIMA is calling on the banking sector and is calling on policymakers and all those actors who are involved in this position to, we're looking for fairness when it comes to
Exactly.
these issues.
But Tom,
And
the crazy thing in there is, and I I know what, especially when I was a partner at PwC and I was a global crypto leader, I had the privilege of working with many of the large crypto firms. I'm happy to bet money with anyone, any of the listeners today on the call, that the top 10 crypto exchanges have better KYC, have better AML, have better transaction monitoring than any of the top 10 traditional banks. I'm happy to bet money on it because these crypto firms are able to get the leverage, RegTech technology, a lot tech technology, and they have the traceability solutions we have with crypto is way more advanced than we have in the TradFi banking space. What I find ironic is that, in the crypto space, as soon as there's any kind of money laundering or tax evasion case, people blame crypto. But we've seen it this year alone. I mean, I always give the example of where I'm from in Canada, in Montreal, with TD Bank. I find this tremendous amount for basically straight up money laundering. So I think there's a lot of these. The reason we're having a lot of these problems is lack of education, and also career risk. Right? A lot of people are in compliance. They're like, it's easier to say no than actually spend the intellectual time to look at it, understand it. But I really hope this is going to change. And on this, again, the crypto industry is not asking anything more. All we're asking is, if you don't want us as a client, is one thing, but do our proper due diligence. And I'm not saying every crypto company should be a client of a bank, but at least the ones that are regulated, are doing things properly. I'm happy to bet that I have better, often in more regulated and better controls than many traditional firms.
well,
The best example on this is even 9Blocks. Us, we're licensed by VARA. We're a SEMA license, we have VARA license. We have weekly reporting.
right.
Weekly. We have monthly financials. Right? I mean, if a hedge fund in New York registered with SEC doesn't have that, or anyone in Hong Kong or in Singapore. So I think there's a lot of misconceptions about the level of regulations a lot of crypto firms have, and I wish that's going to change. I hope that's going to change over the next couple of months.
Yeah, I was going to say to you, Henry, what would be, a successful example or a strategy that we can point to that can help address this challenge of debanking head on?
First of all, I think I'm happy from a policy making perspective in the US, which is the crux of the problem, because the reason banks around the world are not banking crypto is because they're afraid of losing their US correspondent banking relationships. Really, if you think about it, which is crazy, the weakest link globally right now in the crypto space is really 2-3 correspondent banks in the US. Names that I mentioned before, like UTB being a good example in Texas. So there really is 2-3 banks, that's it. So every bank, especially those in smaller countries, they're worried about losing the correspondent banking access. So that is one problem. And what I found in often these correspondent banks, it's a pure lack of understanding. Again, you say crypto, they think it's money laundering. You take crypto, they think it's volatile. They think about meme coins. So I think that's one of the challenges we're having there. I'm really hopeful that now things are changing. For example, is BlackRock going to be unbanked? If because they're involved in crypto, why are we not unbacking them, right? So I think there's a lot of these things that I hope this year would change, really driven out of the US. So let's see how things span out.
So that's a great segue then to look to next year and President-elect Trump's return to the White House and the implementation of regulations like we're seeing in Europe and MiCA. How do you anticipate global policymakers then will shape the digital asset sector over the coming year?
Oof, a big question. I'm very optimistic for the year ahead. I really believe. I mean, there's so many tailwinds right now coming up in the crypto space. I'm extremely bullish for the year ahead. From a policy making perspective, I think it's very interesting because the big right now, until basically Trump's election, if you're a crypto entrepreneur and you set up your business in the U.S., frankly, you're an idiot. I mean, you're unless you love paying legal fees. There was zero upside of doing so. Now it's going to be very interesting with the change of tone, and this is pretty. I mean, a lot of people around Trump are very pro crypto. I mean, really, from not only Elon Musk but a lot of this entourage, including his sons, by the way. So I think that's going to be very interesting to see what happens and if the U.S. positions itself on that perspective as a crypto-friendly jurisdiction. That's going to have a knock-on effect for sure in other countries. Let's think about Hong Kong and Singapore. The last really 2-3 years, they were quite slow. They didn't issue many licenses. Now they know there's real competition, and especially that they see the UAE in particular move so quickly. Europe with Mika as well will need to really consider. I think it'll be bubble on its own, the European market, but it'll be interesting to see how that comes out, and if there's any activity of firms leaving the EU. We'll see about that. A couple of things I think to watch for the year ahead. I'm really watching what's happening with the stable coins. I mean, there's over
Right.
$200 billion in stable coins. I mean, to put things in perspective, on January 1, 2020, literally almost 5 years ago, day for day, there was less than $5 billion in stablecoins. Now we're over 200 billion. I mean, for those of our listeners who are in the US, you're in Canada, you're in London, you don't have a problem with payments. You're not worried about you're very blessed with great central bankers and policymakers. But talk to people in Lebanon, talk to people in Argentina, talk to people in Turkey, talk to people in most of LATAM, most of Africa. Stablecoins are becoming a day-to-day tool that people are using. Actually, I think one of the biggest misconceptions today in international trade is the public world really underestimates how much of international trade now is settling on stablecoins. Tremendous amounts, right? So think about if you're a Malaysian company doing business with a African company or a Latam company, you're not going via the Swift network. It's too complicated. Payments don't go through. If you have a bank account in the first place, there's a tremendous amount of business being done right now via stablecoins. I think that's one thing I'm definitely watching. Another area that I'm watching for a year ahead is what's happening in the DeFi space on decentralized
Right.
finance. I mean, right now, to put things in perspective, depending of the day or the week, it's anywhere from 5 to 10% of the volumes of centralized exchanges are taking place on DeFi exchanges, and that is it's quite a big percentage in my opinion. So it'll be very interesting to see from a policy making perspective how that evolves in the year ahead. How regulators try to come up with a way to approach DeFi. It's very difficult. And I also believe maybe DeFi should not be regulated, the way we regulate centralized exchanges. So I think that's going to be very interesting to watch on that perspective. And I would say one of the other things I'm really watching for the year ahead, and I think where policymaking will have a big impact, is the continuous entry of institutional investors.
Right.
I know that somebody that focuses on raising money for our own hedge fund, there was a career risk. If you're an IC of an allocator, especially that they're quite cushy job, it's quite comfortable, like it is, let's say you don't get fired every day, bringing a crypto hedge fund or crypto investment at an IC was a challenge. I mean, you were taking a career risk. I think this is now completely shifting. I'm curious to see how fast this change is going to happen, where now actually investors may ask these, stakeholders may ask allocators, hey, like, why not crypto? Why not Bitcoin? So I think this is it changes the paradigm a bit from that perspective, and that's definitely something to watch. And maybe one last point of items that I'm watching is really what happens with nation states.
Right.
I mean, let's not forget, Trump has been mentioning multiple times now that he wants to create a strategic reserve of Bitcoin. There's been actually numerous bills now presented, from senators in Texas to even across the world, from even a deputy in the Duma in Russia just put that forward as well after Putin spoke positively of Bitcoin. I think it'll be very interesting to see whether this concept of a strategic Bitcoin reserve gathers momentum. Let's not forget the U.S. alone. The U.S. alone has around $20 billion of Bitcoin right now. These are assets that were seized. The UK as well has quite a lot of Bitcoin on that side. So do they keep it? Did they decide not to sell it? And the other countries have taken a very proactive stance on gathering Bitcoin. El Salvador is a very good example. To even Bhutan, a country with 800,000 people, has over $1 billion in Bitcoin right now. So it's 1/3 of their GDP. So I think it's going to become very interesting, because if this concept of a strategic reserve gathers some steam, I think then you're really going to see state nation FOMO, and that's a whole different ballgame than what we're seeing right now. So I remain very optimistic on this perspective from all these different elements.
Henry, one area you didn't touch on, and we talked about it the last time we were on the show, was tokenization of real world assets. Now, AIM's survey, again, to go back to our report that we did earlier in the year, highlighted growing interest in tokenization. 1 in 3 of the hedge funds that we surveyed say that they're exploring it, and over 10% of crypto hedge funds that we surveyed say they're already investing in it. I asked you this last year, so I'll ask it again for the coming year. Is the coming year going to be the breakthrough year for tokenizing real world assets? Or what's needed for this trend to really take off?
Yeah, very good question. And I've been wrong on tokenization. We used to call it security tokens back then. We used to call it tokenization. Now many refer to them as real world assets. I've been wrong. There's clips of me on Bloomberg on 2018, 19 on CNBC talking about the year of security tokens.
The
I
emerging
was
trend.
clearly wrong. And I was way too early about that. Now I'm a firm believer 2025 will be a big year for RWAs or real tokenization for a couple
Right.
of reasons. This will be driven a lot by the fund managers as well. Let's look at the use case. I mean, there's already right now a couple of $billion of tokenized treasuries right now that various crypto companies are using for managing the treasury or just as an easier way to hold treasuries, for example. One area that will be interesting for this listeners of the long short will be really fund units. I mean, that's even something that 9 Blocks we're looking at because if you think about for a lot of the more Web3 or crypto savvy allocators, if you go today to an endowment, they have a whole team that's used to filling up subscription documents, which frankly are completely outdated. There's 0% of the time when the lawyers draft these subscription documents do they think about user experience or user journey. It's absolute garbage. I think with tokenization, you allow investors to buy units of these funds, transfer them, as long obviously with whitelisting addresses, KYC processes, but it really allows the whole ecosystem to be way faster, way more efficient. So I'm a firm believer that the asset management sector will see a wave of tokenization or in the year to come. I'm also watching what's happening with treasuries. I think that's going to be very interesting to see. The one element to watch there is today, every crypto company puts collateral, let's say when you're trading, in stable coins, basically dollars. The big question will be when tokenized treasuries start being accepted as collateral, where basically the treasury rate becomes the de facto yield-free, risk-free rate in crypto. So that would be interesting to watch as well from that perspective. But I'm very bullish for the year ahead in the space. And by the way, and also, anywhere from any large illiquid assets where there's an illiquidity discount, from ships to a big piece of real estate, to other even private equity funds, units and stuff. I'm really, I think, optimistic about the year ahead. And I think unlike the previous years where I was wrong and I was too early, I actually think 2025 may finally be the year of security tokens and real world assets.
You've heard it here first, listeners. 2025 will be the breakthrough year. Henri, this has been tremendous. Just one final question from me. I mean, you've written extensively about crypto and digital assets. We talked about this in your introduction. And that's for readers of all ages, from children right up to, people who are taking interest in it like myself. For anyone who wants to dive deeper into the fundamentals or wants to keep up with the latest trends, where can they find all of these nuggets and content and resources?
Yeah, you raise a good point because I've been teaching now crypto in university since 2015, and I'm a firm believer that anybody in financial services, you may love Bitcoin, you may hate Bitcoin, you may love cryptocurrencies, you may hate them, but I think we have this moral and now fiduciary duty to at least understand them, and then you can make your smart, educated decision on whether you think it's all vaporware or it's actually real, the future of money. I think there's many ways. When I got into crypto, we used to go out to read technical white papers. It was very geeky. Now there's so many ways to read about it. Like you mentioned, I have a book, the Book of Crypto, which is a best-selling book that explains crypto for financial services professionals. On my YouTube page, I have a lot of educational videos that I put on. But also kids, you mentioned. I have my for those who are watching this on video, but my recent book that came out called Decoding Crypto, which is really for the 8 to 13-year-old market, and really we interviewed over 200 teachers and educators and parents on the book. And by the way, I can tell you it's way more difficult to write a kid's book than a book for adults because you need a superhero, it needs to be funny, it has to rhyme, it needs to be engaging. In the latest book, for example, it's Henry and Hodler, my buddy, and I have 2 little friends called Nakamoto, and I have a female superhero called Solidity, named after the Ethereum coding language. So it's actually quite complex. I did it with my co-author, who's a kids best-selling kids author. We got the book out. I'm very proud to say, it became a top 5 bestseller and #1 new release last month globally for kids books on finance. So there's a lot of things like that if you're looking for it. What I recommend as we're heading into the holiday season is, if you're looking for a gift for your kids, yeah, you can give them another book, another thing. It's great. They've had it all. Actually, why don't you give them a bit of Bitcoin? First of all, it's a great way for you to learn. Put like a $20 in Bitcoin and experiment with it, right? And I think give that to your kids as a gift. And you may be surprised and listen to them. And that's the one piece of advice I give to a lot of, when I deal with boards of banks or CIOs or very, let's call them experienced, not older, experienced allocators or people in finance, is that, often we're often stuck in our own ways. But ask the youngest member of your family over Christmas. Ask them what they think about Bitcoin. Ask them what they think about Dogecoin and meme coins. Ask them what they think about, NFTs. And you'll be very, very surprised, how the young generation looking at this, people our age may have an issue with Bitcoin and cryptocurrencies. You'll be surprised of the reaction of the kids. And I think we owe it to that generation. I wrote my kids' book because my now 8-year-old daughter used to go to school and tell her friends that her dad works for Bitcoin. And I was like, I have to fix this problem. She often used to refer to me as the CEO of Bitcoin. So there was a lot of these things that, there's a lot of this generation needs to be taught these topics. They are the generation that will be the most impacted of these changes. And I think we have a moral duty to try to educate them as well. So as parents, that's a great thing to do is, instead of giving your regular gift, give them a bit of that. And during the holidays, what I recommend to everybody is, just spend a half an hour, 1 hour. There's a lot of content on YouTube today. There's a lot of stuff that is written on the future of money. And at least then you can make your smart decision. Or maybe you decide that, Bitcoin is going to go down to zero and it's all snake oil. Or you may decide it has a role in a diversified portfolio.
Henri, we could talk for hours. Fascinating insights, and it's been really great to catch up with you on what has been a transformative year for crypto and get a glimpse of what's ahead. So we wish you all the very best to you and your family for the holiday season, and no doubt we will speak to you again in the new year.
Likewise, and thank you to you and everybody in the AMA community for all the great work, especially with the AMA Digital Assets Working Group that you guys have done for not only the crypto hedge fund industry, but also for the digital assets industry more broadly, and TradFi hedge funds entering the space. I think the entire ecosystem is very grateful for the great work that Tom, you obviously have done, and the entire team have done in the space. So a big thank you really on behalf of the crypto community for all the great work that AMA has done. We really, really appreciate it. We came a long way from the white paper of Bitcoin you see behind me on my walls and the cover of The Economist there to where we are right now. So thank you very much.
Many thanks, Henri.